What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only Elon Musk and some very important points he's made about the overall economy and how this may affect NIO's share price. I'm going to warn everyone that Elon Musk is telling us that there might be another big crash in the stock market. I'm going to break down how this may affect NIO, unfortunately. I also believe that it's very important for me to prepare you based off what's going on in the current world right now by telling you what the hard truth is, as unfortunate as it is. The truth is the truth, right? Now, before I break anything down about this, before I talk about how this all could affect NIO, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free NIO share. It's a limited time offer. The offer ends in 13 days, so check it out before they run out. With that out of the way, let's get on with the video. NIO was down 2.82% for the day on Friday as the market did have a bit of a pullback, and whether or not NIO does continue to run is going to depend on the Fed. I believe it's possible for the market to try to rebound based off indicators. I'm going to show you those tomorrow, actually, but I just want to mention we could get a rebound as we approach the FOMC meeting, and whether or not, after the meeting, if we crash or not, or if we get a rally, it's going to depend on the Fed. If the Fed pauses, the market could rally even more, and then later on, we might see more downside. If the Fed doesn't pause and they continue to raise rates and they remain hawkish and they end up spooking the markets again because of what's happening to the banks, then the market could crash and this could drag down NIO. Now, Elon Musk is saying that a global recession could last until spring of 2024. The first thing you have to remember is he's saying a global recession. This will affect China, India, the US, countries all over the world. Secondly, has there ever been a time that the stock market bottomed before a recession? The answer is no. No, the stock market bottoms during or after recessions. Now, is the market very forward looking? Sure, it is, but there's no guarantee it priced in much of what is about to happen. That's why you have to be very, very cautious. The whole SVB situation, they're now seeking bankruptcy to protect themselves for reorganization. The problem is a lot of these banks were over leveraged, and we had a broken banking system that was not regulated properly. And it allowed these banks to make really bad moves. It allowed the banks to lend out way too much of depositor funds and suffer because of it. It also allowed for improper risk management, and as the Fed began to tighten rates, some of their investments which are not used in the right way hurt them, and then on top of that, their other investments into like bonds and mortgage-backed securities hurt them even more because we started to see the long-term yields not actually keep up with the short-term yields, which started going up even faster, which means they're suffering and they're on the verge of essentially collapsing, unfortunately. Now, Kathy Wood has come out and she actually said that while the U.S. banking system was seizing up in response to the bank runs, basically some other assets like Bitcoin, Ethereum, and other crypto networks didn't skip a beat. She also mentioned that there's a failure from regulators. There are very, very bad things going on in the traditional banking system, and people, the regulators, should have been all over the crisis that was looming in plain sight. She's mentioning that there are asset and liability duration mismatches, very suspicious, as short rates soared 19-fold. This is very similar to what happened in the 1920s. Elon Musk said, a lot of the current year's similarities to 19 and 29. He's saying there are lots of similarities right now to what happened, and we know what happened to the stock market after that time frame. Elon Musk is also, retweeting memes like this. The Fed, the big banks barely holding on, trying to fix things, and they're struggling, especially for the regional banks. We need us to be diversified regardless. Then Elon Musk is saying things about how in just the past week we've had 5 bank failures from Silvergate, SVB, Signature, First Republic Bank, which was down 33% on just like Friday, now Credit Suisse. That is just insane. Elon Musk has a different argument. I don't really fully agree with him on this, but he's saying that the Fed is operating with way too much latency in their data and the rates need to drop immediately. I do agree with him about the Fed operating on latency, but I don't think the rates have to drop yet. I think they have to remain high for longer because inflation is still very sticky and there's still lots of work to be done. But he does have a point, and his point is they eventually will have to drop quickly. They eventually will have to. And the reason for that is because the Fed tends to pivot during an estimated time, but that time frame could be adjusted based off the current economy. If the economy ends up breaking like way too quickly, if that happens, then the Fed might have to pivot even sooner. And that's oftentimes why people associate the Fed pivot with the stock market crash. That's not actually entirely true because the market crashes because of the very hard economic hardships at the time, not solely because the Fed is pivoting. The Fed is pivoting in response to that, and they tend to be correlated altogether. So, once again, if Elon Musk is saying this, and if the Fed just pivots now, which I'm doubting, the market could still crash like very soon and later on because the system would be breaking. Elon Musk also said about, what was this, like less than 2 months ago, that he's worried that the Fed is crushing the value of the entire stock market. Now, what is Elon Musk talking about? Because the market's been going up for the past couple of weeks and holding up pretty nicely for the most part. We're still very close to 400 on SPY is what I'm talking about. We're still overvalued in a way. We didn't necessarily crash to new lows or anything like that. What is he talking about? The answer is he's talking about the future. He's very future minded. He's looking like 7 months ahead, 10 months ahead, and thinking, what the Fed is doing is they're going to disrupt this entire economy. They're going to hurt people. They're going to cause unemployment to go up. They're going to cause a massive recession in his eyes. That's what he said. This is very important because if Elon Musk is right, which I believe he most likely is correct about the recession and other factors, it's very likely we're going to see NIO and the whole market get dragged down more. It's very, very likely. I want everyone to be prepared for that. If the market crashes, what's holding NIO up right now is $8. There's no guarantee $8 will hold going into the next couple of months if the market does crash, which I believe it's very possible for something like that to happen. For SPY, I was looking at a couple of possibilities. I didn't draw everything out, but we could form like a head and shoulders. There's also this possibility where, hold on, the second possibility is like us pumping up and barely hitting levels like this, and then going to the FOMC, and then we just start collapsing off FOMC. That's another possibility. No guarantee we actually form the head and shoulders perfectly. It could just be a weak shoulder and etc. But it's very possible that depending on what the Fed says, there could be more downside to come for the markets. I'm going to make this one yellow. All right, so I'm seeing us either continuing to pop and then possibly just crashing from this point on, depending on what the Fed says. If the Fed pauses, we could get another rally, which is what this blue line is telling us, and we could actually finish the whole head and shoulders formation. And what this all means for NIO is if the Fed pauses, NIO could rally to the 9s, but it's eventually going to come back down to the 8s later on. If the Fed doesn't pause and they keep raising rates and the market starts this like big crash cycle, NIO could fail at 8 and come all the way down to the 7.7, 7.25. Then there's the 6.5 zone. That's going to be a very important support zone for NIO. I know that seems very far down there. I know people don't want to hear that, but look at what the price has been doing for the past few months. It's been continuing to downtrend. Why? Because it's not NIO's fundamentals that are the main reason. They are playing somewhat of a role, at least to some degree, because NIO did not have the best earnings. NIO's margins were a little off, and also they missed, their deliveries were not that strong for January. Excuse me. I believe it's very important to note all of this because going into like the next month or so, there's likely going to be more pain for the markets, especially because we're getting closer to earnings. So I just wanted to make it all very clear for everyone that there is likely going to be more downside in the future, and you need to be prepared for that just in case things don't go as planned. Thank you all so much for listening. Please enjoy your weekend. Remain calm, cool, and collected. And I'll see you guys in the next one. NIO to the moon because the long-term future is still incredibly bright. And peace out.